Ladies and gentlemen, good day and welcome to the HG Infra Limited Q1 FY26 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Saloni from Go India Advisors. Thank you, and over to you.
Good afternoon, everybody, and welcome to HG Infra Engineering Limited earnings call to discuss the first quarter of FY26 operational and financial performance hosted by Go India Advisors. We have on call Mr. Harendra Singh, Chairman and Managing Director, and Mr. Rajiv Mishra, the Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore moved in conjunction with the risks that the company faces. I now request Mr. Harendra Singh to take us through the company's business outlook and performance, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Saloni. Good evening, everyone, and welcome to the HG Infra Engineering Limited earnings call for our Q1 FY26 results. During this call, we will provide an overview of our financial and operational performance, discuss our strategy roadmap, and outline our growth ambitions. We will also highlight the key initiatives undertaken during the year and share our vision for sustainable long-term expansion in FY26 and beyond. HG Infra Engineering Limited has over 22 years of proven expertise in the construction of roads and highways and has earned a strong reputation for quality and timely execution in road sector. Building on this foundation, we have now diversified into critical infrastructure domains such as railways, metro, renewable energy, and transmission projects. We commence FY26 with a steady momentum, further reinforcing our position as one of the fastest growing infrastructure companies in India. As a part of a strategic approach, our goal is to derive around 30 to 40% of our order book from known road sectors over the next 2-3 years. In this line, during this quarter, we successfully secured our first transmission project worth approximately 350 crore in Odisha and received our third of BESS project from GUVNL for 300 megawatt. With this addition, cumulative contracted capacity for BESS project has reached 735 megawatt, that is equivalent to 1470 megawatt hour, reflecting our commitment to supporting the government's vision for a green and sustainable future while meeting the nation's growing per capita energy demand. These achievements position us for the third largest BESS player in the country. Moving on to some updates on the infrastructure sector. Talking regarding the road sector, the government has set a construction target of 10,000 kilometers of highways for FY26. NHAI plans to award 124 projects spanning 6,376 kilometers at an estimated cost of 3,45,000 crores, and HAM remaining dominant through 84 projects covering 4,714 kilometers. And with this outlook, we foresee significant opportunities to secure new projects in the coming months for the year. The company plans to pursue bids worth 1 lakh crores in HAM and EPC segment, targeting project award of at least 6,000 crores in FY26. Underscoring its strategic emphasis of winning large-scale, high-value contracts in road sector. Rails and metro, with government visions, is anchoring a large-scale modernization and capacity expansion, and by 2030, Indian Railways expand to complete 100% of the electrification and broad gauge network, cutting the carbon emissions and improving efficiencies. Thousands of kilometers of new rail lines are being constructed, while track doubling and gauge conversion projects are rapidly enhancing the capacity and connectivity. Under this nationwide station redevelopment programs, more than 1,200 stations will be transformed with the world-class facilities to improve the passenger experience. With this year, the company plans to participate in bids worth approximately 50,000 crores in these sectors. The company is actively pursuing railway and metro opportunities, aiming to secure projects worth approximately 1,500 crore in the current financial year. In solar and BESS, the total installed capacity, if you see in the country, has reached up to 220 gigawatts as on 31st of March 25, and that in addition to these installed capacities, India has 169.4 gigawatt of renewable energy projects under implementation. As India leads to the clean energy transition, the battery energy storage systems, the market is projected to grow from $7.8 billion in 24 to $32 billion by 2030. With 66 gigawatt of storage capacity planned by 2032, on the solar front, India has crossed 100 gigawatt of installed capacity with over 30 gigawatt added in 24 alone. So this strong policy-backed tailwinds present massive opportunity for infrastructure players like us to unlock value across both EPC and asset platforms. The company is targeting a 5% share of India's total available battery market. For FY 25-26, the estimated order inflow for BESS is approximately 2,000 crores, which includes one secure project which already has bagged around 800 crore rupees. In transmission and distribution, where the government envisions a robust, modern and green power grid to meet rising energy needs, with major investment in high-capacity lines and advanced substation and HVDC system over the next decade. With one nation, one grid, one frequency policy that has unified all regional grids, enabling 1,12,250 megawatt of inter-regional transfer for stable, reliable nationwide power. At HG, we aim to secure transmission and distribution projects worth 1,000 crore at least for the year, and one we have already backed is 350 crore. Driven by strength, agility, and steady growth, we are poised to capture emerging opportunities in renewables, power transmission and road sector, as well as metro and urban infra. With proven execution, technical expertise, and industry expertise, we are ready to deliver large-scale infrastructure projects that power India's long-term development vision. Let me begin with a glimpse of our operational highlights. As in Q1 FY26, the company's orders stood at 14,656 crores, comprising 9,623 crores from roads and highways, 2,912 crores from railways and metro, 1,620 crores from BESS, 500 crores from solar. Within the road sector, 30% of the roads are under the HAM model and 36% are the EPC projects. Railways account for 20% of the total order, while solar and BESS contributes 11% and 3%. This is an update on the EPC project, while Ganga Expressway, which has reached at about 97.4% completion, as an on track for completion of 100% by Q2 FY25. The Delhi UER project has been completed successfully and handed over to the authorities and is anticipating to receive the completion certificate shortly. The Jamshedpur elevated project is running smoothly with a progress of 15.2%. The Neemrana Tumkur project is gaining execution momentum and has reached to 42.5% completion. Regarding the HAM projects, the Karnal Ring Road project has reached 77.1% completion, marking a steady progress and likely to be completed in Q4 FY25. As shared in our previous quarter, the provisional completion certificates for the projects of Raipur-Visakhapatnam corridor, that is OD5 and 6, already received, and both projects remain close to completion now. The project AP1 of Raipur-Visakhapatnam project is also progressing towards completion with PCC recommended, and all these three projects continue to be on track for 100% completion, that is COD, in Q3 FY26. The solid progress continued on Khammam-Devarapalle the project of KD1 and 2. The PCC already received. These projects are at 88.4% and 85.5% respectively, and both the packages are expected to be completed 100% by Q2 and Q3 respectively. The Chennai-Tirupati HAM project has reached at 21.4%. The appointed dates for Varanasi-Ranchi packages, that is package 10 and 13 of this corridor, are expected in Q3 of FY25-26, where significant development for forest clearance has been done. For Kosi Parikrama Package 6, Ayodhya, the concession agreement is signed on 21st of June of 25, and execution stands at 2.2%, and the appointed date is expected very soon. In Narol Zarkesh project, the financial closure has been achieved, and the appointed date is expected within the month only. As for the railway projects, the DMRC project is around 82%, progressing as per the scheduled timeline, and within next 3 months it is going to be completed 100%. The Bilaspur RVNL project, that is 69% complete. Kanpur railway station project is at 26.42% completion, and now the project execution is going on full swing after the initial design and land hiccups. Dhule Nardana railway project is at 13%. The Gaya Sonnagar project, Karanjgaon project, they are at about 12.7 and 9.3% completion respectively. Appointed date for the New Delhi railway station has been declared as 6 August 25. The execution will start by end of Q2 FY26. And the update on the solar project, which we procured during last financial year, we have now at around 70 plants completed. HG Infra, out of 183 plants, cumulatively, this is 700 megawatt DCA capacity, and among these, the company is directly responsible for 167 plants, with an estimated EPC value of 2,243 crores. In terms of financial structuring, the debt funding for this project is progressing well, with approximately 83% of the required funding already sanctioned till June 25. The remaining approvals and subsequent disbursements are anticipated to be finalized in Q2 and Q3. Regarding the equity financing, the total equity investment required for the solar project stands at 721 crore, and as of 30th June 2025, the company has infused approximately 610 crore into these projects, and the remaining balance is set to be deployed in Q3 of FY25-26. As far as BESS project is concerned, as we have shared in the previous quarter, the company executed binding agreement with GUVNL and NVVN for 435 megawatt, that is 870 megawatt hour of project. The scheduled commissioning, that is in November 26 and December 26 respectively. In May 25, we have secured an additional 300 megawatt, that is 600 megawatt hour of project from GUVNL, and with this the cumulative contracted capacity stands at 735 megawatt or oblique 1470 megawatt hour. Upon completion and commissioning of all these BESS projects, company expects annual revenue of 225 crores from BESS. The equity requirement for all these three projects is around 500 crore, of which around 1 crore has already been infused, and balance 119 crore is anticipated to be done within this financial year and with BESS in financial year 27 and 28 respectively. Procurement progress for BESS project has been initiated, and the key components are in advanced stage of negotiation. We have shortlisted Tier 1 Chinese supplier after our Chinese team visit to China for import BESS system and power conversion systems. And we are likely to finalize the order for power transmission, switchgear, etc. by 30th September 25. This is a recent update on the monetization of 5 new HAM assets, that is the tranche 2 of HAM. Over the past few months, our leadership team engaged in intensive discussion with several prospective investors to monetize our second lot of 5 HAM projects. So those projects are Raipur-Visakhapatnam corridor, OD5, OD6, AP1, and Khammam-Devarapalle package 1 and 2. So our goal was to secure a partner who could provide both financial strength and the sector expertise to maximize value of our stakeholders. It is a pleasure to inform you that during this week, we executed a binding offer document with New Infra Income Opportunities Fund. Under this agreement, our holding company HGs will sell 100% of its equity stake in the 5 wholly owned subsidiaries managing this HAM assets. This milestone marks the culmination of a well-orchestrated negotiation process and demonstrate market confidence in the quality and profitability in these infrastructure projects. The enterprise value of the entire transaction is at 3,584 crores, and the total equity invested in these and the total debt obligation of all 5 assets are at 67 crore and 2,200 crore respectively. Soon we will be initiating the process of fulfilling the compliances of the condition precedents as per the binding offer, which includes client approval, lender's consent, and other representation and warranties. We expect to conclude these formalities and expect to conclude the transaction within this financial year. This transaction will deliver significant strategic benefits to the group by strengthening the balance sheet and reducing leverage, thereby enhancing our financial flexibility. The realized funds can be redeployed into our new HAM beds, road expansion, or other high return infrastructure opportunities. We believe this deal achieved a robust valuation, positions the company for accelerated growth and value creation in the upcoming years. Regarding the equity requirement on the HAM projects, on the balance of the HAM projects, the total equity requirement for 11 HAM projects, those are balance, is 1,066,064 crore rupees, and as of June 25, 997 crore has been infused. Out of the remaining 298 crore is scheduled to be done in 9 months of FY26, followed by 183 crore in FY27 and 187 crore in FY28. Let me now give an overview of the other significant updates of Q1 FY26. The company has secured its first transmission project from PFC Consulting Limited in BOOT model with a project cost of approximately 350 crore for establishing the interstate transmission system in the Eastern Regional Generation Scheme 1 in Orissa. The project duration is 35 years from the date of commissioning. Additionally, the company has received a project from Military Engineering Services valued at 117.8 crore for creation of integrated material handling facilities at Naval Dockyard in Mumbai. Moving on to the financial highlights of Q1 FY26, the revenue for Q1 FY26 reached at 1,709 crore with an EBITDA of 236 crore and an EBITDA margin of 13.79%. PAT for Q1 FY26 stood at 125 crore with a PAT margin of 7.34% compared to rupees 140 crore and a margin of 9.27% in Q1 FY25. On a standalone basis, our gross debt stands at 1,049 crore. This comprises of 664 crore working capital debt and other term loans and maturities. Now the consolidated financials are at revenue of Q1 FY26 reached 1,482 crore with an EBITDA of 268 crore and an EBITDA margin of 17.52%. PAT for the Q1 26 stood at 99 crore with a PAT margin of 6.7% as compared to 163 crore at a margin of 10.64% in Q1 FY25. As informed in last 2 quarters as well, the dip in consolidated revenue and PAT is due to elimination of intergroup transaction with solar SPVs for solar projects, which are recorded as capital work in progress in consolidated accounts. While standalone results reflect EPC revenue and taxes, the tax cost remains in consolidation results until the SPVs start generating operational revenue, after which the margins will improve. Let's explore what's next, turning into our future strategy plans. As we are confident aiming for order inflow of around 11,000 crore in FY26 with clear data-backed strategy to secure 75% from roads and railways, where our execution capacity outpaces competitors and 25% for rapidly expanding verticals. Our historical dominance in roads and highways continues to drive core growth, but we are not resting on our laurels. Recognizing increased competition and margin compression, we are taking proactive steps to reshape our portfolio for a long-term value creation. We are aggressively entering into high-growth, decent margin sectors like basin, transmission, distribution, capitalizing on the deep engineering roots and a proven execution track record. This is not just diversification and it's a targeted expansion into future profit pools. Our relentless focus on strategic bidding, cost control, and technology-driven project management is designed to protect and expand margins, minimize the debt, maximize shareholders' returns. In essence, we are positioned for accelerated growth and superior returns. and our diversified pipeline, financial discipline, and the bold sector bets are key levers as we redefine ourselves as the future-ready, multi-sector infrastructure leader, delivering outside value to our investors year after year. I would now like to hand over the call to the Go India team for further deliberation and further question answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. In order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan from Dolat Capital. Please go ahead.
Thank you, sir. Sir, first on this latest 5M deal. So, sir, if I work out 3,584 crore is the EV and versus equity and debt amount, what you mentioned, 767 and 2,200 crore, the total is 2,967. That means the equity value that we are getting is 617 crore versus 767 crore invested. That means a 0.8 time price to book. Correct me if I'm wrong.
Yeah, almost you are at correct stage, 3,584, and the debt is 2,200 crores into this, and the total 767 crores of equity is invested.
But sir, then not able to understand why we are selling at 0.8 time price to book.
It's not, I think 1.8 times, not 0.8 times. You see the number, it's 3,584 crore of enterprise value, which out of 2,200 crore is the debt. So the net amount which we will be getting is 1,384 crore rupees against the equity investment of 767 crore.
Okay. My mistake. Got it. Second, and then this cash we will be getting by?
Sorry?
This cash amount, when will we be receiving this cash?
So we are expecting that two of the projects where the COD and finally NOC from lenders and clients could be managed within next 3 months by December, and further next 3 probably by March.
So if you can break in terms of the value, how much we will be receiving in FY26 and
No, say every total amount what we are expecting is we would be getting within the FY26 only. So by December 25 of, say, let's say for this particular quarter 3 of the quarter FY26, tentatively 2 of the projects could be done as a transfer, and the rest 2-3 will be done by March 26. So everything will be done within the year only.
Okay. And then whatever the gap would be, that we will be reporting as an exceptional gain in the standalone books.
Of course.
On the equity transfer.
Yes.
Yeah. So now on the operational front, sir, so this...
Sorry to interrupt you, Mr. Shravan. I will request you to get back to the queue for follow-up questions, please.
Okay.
Thank you. The next question is from the line of Vaibhav Shah from JM Financial. Please go ahead.
Yeah. Sir, when do we expect to receive the appointed dates for the HAM projects, especially the VRK ones?
Yeah. So there are 5 projects where the appointed date is expected. So one is which we have received very recently is New Delhi Railway Station, that is on 6th of August. Next week we are going to have this appointed date for Ahmedabad HAM project, and subsequent to that in September only we would be able to receive the appointed date for both Jharkhand projects, that is 10 and 13 of Varanasi-Kolkata corridor, and last one which is Ayodhya, and that project we are expecting that somewhere in November we would be getting the appointed date.
Sir, and any what are the expectations for LOA on Nagpur, Chandrapur, both the packages?
So those projects where the land acquisition is at about, say, 42% as of now, so the minimum requirement is 70% for issuance of LOA. So probably it will take another 3 to 4 months. So by December, we are expecting the LOA could be released.
Sir, so from these 4 HAMs by AD is pending, what kind of revenue are you factoring in? And also for the MSRDC project for FY26?
So we are not considering anything from MSRDC project because say since the LOA we will be getting, then the appointed date is likely to be declared. So we are not expecting much from those projects. But apart from those projects, is 4 HAM, which we are targeting about 1,200 crores of total order execution in these 4 HAMs within this year.
Okay. So what are the receivables currently, and of that, what is the HAM and solar?
So majority portion of receivable is HAM and solar only. So the solar SPV, the receivable is around 438 crore rupees, and HAM project is 395 crore rupees.
In the total number?
And the total number is 1,360 crore rupees.
So you were expecting the solar receivables to come down sharply. So when do you expect the overall?
Something has happened. We have executed around 300 crore during the month or during the quarter. So out of 300 crore rupees, we could receive, say, the number which was at the same and remains same. So whatever was the closing number for March 25 remains the same. So if the only 300 odd crores of disbursement could happen within this year, but now the things are very rapidly because 83% of the sanction has been done, and we are getting the release of funds from banks through SPV. HG Infra is also getting this. So by September and by December, say things would be 100%. We would be recovering the entire receivables from SPV through banks.
Okay, sir. Lastly, I missed the initial commentary. What is our guidance on revenue and EBITDA margin for the entire year? And why were the margins impacted in 1Q? So we saw that we have put 11 crore of one-offs, which is impairment losses, and it was 5 crore in Q4 as well. So what are these entries?
So I think the reason behind for 2.5% of the this EBITDA correction has been there. So there is one of the item which we were expecting, the change in law in Ganga Expressway. So the change in law of royalty revision is there. So in this project of Adani, we are eligible to get anything variation like change in law and variation is CUS from the client, whatever is being approved by a client. So as of the recent trend, we are revealing the facts that they are likely that change in law approval is not likely to be there within this particular year. So it is going to take time. So we have corrected our number around 40 crore rupees. So because of that number, there is a deep correction in the EBITDA margin. Otherwise, in none of the other projects, the margin correction has been done.
Sir, so entire impact has been taken off right now, or we can
Sorry
expect
to
Q2,
interrupt you,
Q3 as well?
Mr. Vaibhav. I will request
So
you to
entire,
join back.
say around 43 crore rupees, whether the 11 crore is the exceptional item, if you see. So this is there is a say provision has been done, and around 43 crore rupees, so the out of Ganga Expressway that we have corrected in our margin.
Okay, thank you. I'll call back in the queue.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, sir, and congratulations on the transaction. So just
Mr.
continuing
Sarvesh,
on.
sorry to interrupt you. Your voice is very low.
Is it better now?
Yes, sir. Thank you.
Yeah. So, sir, congratulations on the transaction. So just continuing on the previous question. So, earlier we were consistently being able to deliver around 16% EBITDA margin. I think last quarter we were in around 15%, and now this quarter we have delivered like less than 14. So you said, so 14 crores you are saying is an exceptional item for this quarter, is that?
No. Say, I am correcting it there. Say in last quarter, it was 5 crore of provision was has been done by the auditors for the long due receivables. As a whole, it is now 74 crore rupees of total provision has been done till date against the debtors, this current asset receivables. Okay. This is the one thing which has happened is the other item, which is 43 crore rupees. This is the change in law item, which we are not expecting to get realized very soon within this year, as far as Adani project, where it's a back-to-back arrangement with UPDA. So where we are not looking immediately, so we have corrected that number, the margin by 43 crore rupees.
Okay, but is that, have we assessed all the projects?
Major reason for the shortfall. Otherwise, all other projects are going as per the expected margins.
And have we done everything that we were required to do across all projects, or are there any future provisions also that we need to take from Q2? Should we expect normalized margin of 15-16%?
It is likely to be normalized margin only. So we are not, never have factored such things where the current asset or unbilled revenue is having some contract or different claims. We usually have the certainty of those numbers, then only we'll keep it. Otherwise, what we did last quarter. So the provision being done on the basis of their contractual, auditor's obligations.
Okay. And sir, on the road orders, so what is the expectation now? Because even in this quarter, last 2-3 quarters and last 6 quarters, or the industry has not received, but we have been hopeful because NHAI had a pipeline. So, what is the expectation now, and are there some tangible work that has been done from their side? And in terms of our pipeline, where are we? What is the percentage that we are looking to sort of win in the near future, etc.?
In the recent past, we have seen a significant improvement as far as sentiment is concerned. So as of the press release, they are already has declared the pipeline of the project which are going to be awarded within this year only. So there's a long pipeline. There's more than 5 lakh crores of projects which are there, including BOT, HAM and EPC. And apart from that, there's the correction in the long-awaited correction in the pre-qualification criteria has been released. So in both in EPC and HAM. So that gives us the relief in the sense that the project pipeline is there, but the only 2 riders which are there, one is the quality of the DPR, where the DPR checks being taken so much of time, and the land acquisition, which always has been the real critical area, gray area rather, where the progress and any of the claims do occur. So in that sense, they are just guaranteeing that 80% of the land as per the contract should be there prior to issuance of LOA. So these are the 2 factors which are taking a bit of a time, but we are very much hopeful, and I think the ministry is very much optimistic of awarding this at least 3.5 lakh crores of orders within this year only. So we are expecting the traction to be there by November, December onwards. Many projects are likely to be awarded.
What will be our full year revenue guidance for this year, sir?
It remains same as 7,000 crores of because we did around 13.5% year on year for the quarter 1, and almost will remain in this range only.
Okay, sir. Okay, thank you and all the best.
Thank you. The next question is from the line of Vinit from Investec. Please go ahead. Hello, Mr.
Hi. Yeah. Am I audible?
Yes, sir.
Yes.
Hi. Good afternoon, sir. So just wanted to recheck on this revenue growth guidance number. Now, given a lot of our projects are currently either in L1 stage, which are Maharashtra orders, 3-4 HAM projects where we are yet to get appointed dates. And if you exclude a lot of these projects, our executable order book currently stands at less than 10,000 crores. Considering this, how confident are you of us achieving 7,000 crores? And what should actually drive such a strong execution or conversion into revenues?
So if you can see, the projects which we are at very advanced stage of completion, like Ganga, like Odisha, all OD 5, 6, AP1, KD1, 2, and even Karnal. So there are the projects, these, whatever is the balance, would be completed. So this is the one thing which is, and again, the solar. And some significant part of BESS execution is likely to contribute within this year only. So if you see, the other railway projects where, the progress was not that good in the initial phase of the project because of the design and the land issues. So now that has picked us, and in quarter 2, 3, 4 of this particular year, we are seeing around 1,000 crores of execution in railway only. So in these new projects where the appointed date is going to be, they are declared, and including New Delhi railway station, this is around 1,500 crores of execution is likely to be there in quarter 2, 3 and 4. So this gives put together that we would be around 7,000 crore, even if we are not considering anything to be coming from Nagpur Chandrapur projects.
Understood, sir. And sir, on the margin guidance, given we've done slightly lower margins this quarter, how confident are you of delivering 15.5%-16% EBITDA margin for the full year? And I'm just asking because now the ask rate to get there is slightly on the higher side, where we'll have to deliver 16.5% EBITDA margins consistently for the next 3 quarters to be getting anywhere around EBITDA margins which we did last year.
It's basically only checking upon the margins, if anything is not guaranteeing our the thing. So it's a matter of only a time when quarter 4 or quarter 1 of this year we have seen that the margin dip is there. Otherwise, all the projects we do have a decent margins, and we are doing such projects, and with the margins probably in the range of 15 to 16%. We are quite hopeful that by the year end we would be maintaining the same streak.
Okay, so for next 3 quarters, we should be back to 15-16% margin levels?
Yes.
Okay. Thank you so much, sir. Thank you.
Thank you. The next question is from the line of Vishal from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks. Thanks for the opportunity. Sir, you mentioned in your initial commentary that 83% of the debt for the solar is sanctioned. So have we taken any disbursement from that side?
No. See, the sanction to disbursement, there is a gap. We have only taken the disbursement at about 60%, though we have progressed. It's around 58%, roughly, though we have progressed around 78%. So there is a deficit. There is a gap of about 30% in what we have progressed to what we have the loan disbursement has been done. So this is.
So do you think? Sorry.
So the sanction is 83%. The rest is 17% of the sanction is still awaited, where the progress is going on. And wherever sanction has been done, it's only partial disbursement or only few of the plants where the disbursement is not yet done. So in July and August, September, and till November, whenever we are going to complete the entire thing by December. So we are hopeful that so this is a 45% of the balance disbursement would be done, 43-4%.
Okay. So if one has to understand, what is the total debt that is we have taken for the solar as of now?
So it's around 1,100 some crores rupees. 1,100 in the total. I'm not remembering right now. It's 1,100.
Okay. And this was related to the working capital, just thought to check. Okay. Second is, sir, on that battery energy storage, you did mention 500 crore is the equity that will again be putting. And if one do a financial closure at maybe 80-20, then the project cost come to almost 2,500 odd crore. That is one. And second, when we are putting megawatt.
The cost is not more than these project cost is around 1,800 crores. All three BESS projects. This project is around 1,800 crores plus GST, and the total debt, which the equity which is committed is 500 crores, which is 25% of the total project cost. And balance is debt, and out of the total debt, once we commission this project, we will be able to get around 300 crores of grant from government in all these 3 projects.
Okay, so 1,800 plus GST and then 300 crore grant. That's the total project cost.
1,800 plus GST minus 500 is equity, is becoming 1,500 crores of debt, and less than 300 rupees would be plus 1,200 crores of debt would remain once the grant is being settled.
Okay, got it. My mistake. Yeah, 1,800. Okay. So I think then the
Sorry to
project
interrupt you, Mr. Vishal. I will request you to join back the queue for follow-up questions, please. Thank you. The next question is from the line of Janam Jain from ICICI Securities. Please go ahead.
Thank you for the opportunity. So, sir, I wanted a couple of data points for working capital. So, can you provide the number for inventory, trade receivable, contract assets, trade payable, and contract liability?
So inventory is about almost the same number. It's 519 crores inventory, and working capital. Say you were asking for debtors. Debtors is around 160 crore rupees, and current asset is 1,310 crore rupees. And
1,300? Oh, so sorry, I didn't get your contract asset number. Okay. So trade payables and contract liability.
Sorry?
Trade payables and contract liability.
The contract liability is trade payables. So trade payables.
Yeah.
Just a minute. Trade payables is around 1,324 crore rupees, and
Okay.
liabilities is around 1,200 something crore rupees. I think it's 1,200.
Okay, sir.
Now my number is but it's around 1,200 plus.
1,200 crores. Okay.
So trade payables, because the debtors we already have given, trade payables is 1,324 crore rupees. Correct.
Okay, sir. That answers my question. Thank you so much.
Thank you. The next question is from the line of Shravan from Dolat Capital. Please go ahead.
Hi, sir. Just to complete this thing, so standalone cash and bank balance is how much, sir?
It's 162 crore.
162. Sir, 162 crore.
Correct.
Yeah. And retention money is how much, and unbilled revenue is?
I has given the 1,310.
Okay, 1310.
For debtor of 1,350 crore rupees, there is a retention and deposit of about 170 crore rupees.
170 crore. Okay. And mobilization advance is how much, sir?
382.
382 crore. Okay. And sir, this 500 crore BES equity, you said this 1 crore we have invested, another 119 crore in this year, and next year will be the remaining the balance entirely in FY27?
Because this is not next year. Next year, some portion would be done next year, 187 crore rupees, and probably in 28 the balance would be done, because the first project is going to be done in FY27.
Okay, so this okay, so this year 120 crore, next year 187 crore, and balance will be in FY28. Correct. Okay. And sir, if you can repeat the HAM equity to be invested in this year and next year, FY28 I heard the figure 187, but balance in 26 and 27 is how much?
The projected is the balance is 997, which is has been done. So you see the projection is for the year it is 427.
Okay.
Mr. Shravan,
That is the total number including. Okay, sorry. So there is a total number including solar and BESS. If you want to split it out in such a manner, the equity which is balance. For the year it is including BESS it is 427 crore rupees. Correct.
No, sir. No.
BESS and transmission. If it is only roads. So if it is only roads, then it's 298.
298 crore is full year of FY26 or balance 9 months?
26, 9 months, and then 183 and then 185.
183 and 185. Okay. So total, okay. And for transmission, how much is equity needed? And for this year and next year, how much we will be investing?
This year, 10 crore rupees, next year, 25, and further 52 crore rupees in FY28. So if you see the total number for this year, it is 427, followed by next year 438, and next to next year 388. Out of the total commitment balance, 997.
Okay. Got it. Yeah. And sir, just to get a... Yeah. I will complete. I will complete this. Sir, just to clarify on this EBITDA margin provision. So this quarter you said 74 crore provision we have done till date. Out of that, how much was it till FY25, and in Q1, how much we have done? And what you are mentioning, 43 crore is yet to be done, or it is part of 74 crore for Ganga?
So the provision of 74 crore is in total. Only 6 crores of provision has been done in this quarter. Earlier provision was at 5 crore rupees. But for this year quarter, 43 crores of not the provision, it is the margin which we have taken for Ganga Expressway project. Because of the one of the items, this is a change in law which we are likely expecting. It may take some time.
Okay. So this will be maybe a part of other expenses, or somewhere it will be part of this 43 crore that we have taken a hit.
Basically, it's not expenses. Basically, it's the margin dip already has been taken. It's not provision or margin dip already has been taken.
Okay. Got it.
But the margin is very low.
Yeah. Got it. Yeah. Thank you, sir.
Thank you. The next question is from the line of Mohit from ICICI Securities. Please go ahead.
Yeah. Good afternoon, sir, and thanks for the opportunity. My question on the deal, sir, what were the tax implications on the realized gains? What would be tax implications on the gains which we realized from this deal?
That reduction will be 2,200 rupees.
No. So we're trying to figure out tax implication. What will be the tax which you pay on the realized gains? Yeah.
We are not worked out yet.
Understood. And have you given any ROFR for the pipeline of the asset? And also, will we be doing the maintenance work post transfer of asset to the new owner?
No. It's outright selling the asset out. It's an outright transaction.
Any ROFR for the pipeline of the future asset? No, right?
No, I think the future asset which is likely to be there is Concall Ring Road, which probably we are looking at further selling it out. So it's nearing completion. So by June or September of next, say by FY26, in FY27, we are expecting to close the deal.
And so are we going to do maintenance work on this asset?
Sorry to interrupt you, Mr. Mohit.
No, we are not doing any maintenance work in these projects. This is outright selling the project.
Understood.
The entire transaction is going to be selling out.
Understood. Thank you. All the best, sir. Thank you.
Thank you. The next question is from the line of Parth from JM Financial. Please go ahead.
Hi, sir. Thank you for the opportunity. I just wanted to ask if you can quantify your bid pipeline, and also if we have put out any bids where results are yet to be announced.
Sorry?
Can you quantify our bid pipeline?
Bid pipeline?
Yeah, and also if we have bid for any projects where results are yet to come out.
So it's around, in all three sectors, we have submitted around 16,000 crores of project where the bid results are yet awaited. And apart from this, the pipeline which we are expecting, say, as we had already explained about it, because of the pipeline, huge highway pipeline, but we are expecting that we will be bidding around 1 lakh crores of highway, around 50,000 crores of railway, and another BESS and solar projects. in the upcoming time, which we are expecting that we should get at least 10,000 crores out of these bid submissions.
Okay. Sir, can you just quantify the solar bid pipeline once again?
The solar bid pipeline is into in a different mode. It is a BESS as well as solar, because it's BESS also there around 20,000 crores of orders which are yet to be awarded for the year. In transmission also there's a tremendous. It is around 50,000 crores plus of bid pipeline which is today available.
Okay. Thank you, sir.
Thank you. The next question is from the line of Vishal from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks for the follow-up. Sir, on this battery energy storage system, are the equipment awarded?
So first round of negotiation has been done. So our team is in China only. So very soon they are going to come back and probably with all further negotiation and due diligence. In maximum a month we will be able to close it.
Okay, got it. But sir, I think
Sorry
the
to
project
interrupt
cost.
you, Mr. Vishal. I will request you to mute yourself whenever the management is speaking because there are background voices coming from your side.
Sorry. I'll just ask question. Yeah, I'll ask question and then mute. So maybe follow up for that. I think if we award a project now, then probably the costing coming at the range of maybe 0.8 CR per megawatt hour. And the project cost that we have mentioned, that comes to almost 1.2, 1.3 megawatt per hour. So, I mean, can the project cost actually go down? Because if you are awarding now and the battery prices are corrected in the last 6-8 months?
You are probably very much correct. I think there is a bit of a correction which we have seen in the last 6-8 months only. And what we have estimated at the cost which are going to be there and the discovery of the price which we are now negotiating at. So there is an upside chances that we would be having at least 10% upside in the margins front.
Okay, yeah, that's helpful, sir. Thank you, and I'll come back to you. Thank you.
Thank you. The next question is from the line of Madhvendra Kumar, an individual investor. Please go ahead.
Yeah, hello. Hello.
Yes, sir, you are audible. Please go ahead.
Sir, I want to understand one thing, how HAM projects work. I mean, we have sold these projects. So are these projects completed, revenue booked, and now we are selling it? So can you please help me understand how it works?
I can't understand you,
Sir, the project that we are selling means how these selling works, means are these projects are completed and revenue has been booked and now we are selling to release capital?
Almost these projects are about 85 to 90% completed. So once we have received the provision completion into these projects, we have started this monetization proceed. So by the 6 months, within the 6 months, entire completion would be done, and we are completing. And by the time we complete, we will be getting the NOC, and we are going to sell this.
Okay. So they are sold after completing and booking all the revenues. Okay. Sir, and
I think we cannot sell without the completion. Yes.
Okay. Sir, and the next question is, do you think that execution and growth will improve from this quarter ongoing quarter?
Execution dip.
Sir, in the recent quarter, this Q1, I think there was a slight miss on execution front. So from Q2,
the execution has been quite good as far as it's almost 13% plus. But it's only a problem. It's not a execution risk. It's only a margin dip which we have seen because of the margin correction, which of 40 crore rupees, as I already have explained.
Sir, our revenue and PAT is still low.
Sorry to interrupt you, Mr. Madhvendra. I will request you to rejoin the queue for follow-up questions, please. Thank you. The next question is from the line of Shravan from Dollar Capital. Please go ahead.
Hi. Sir, to consolidate and console cash is how much, sir?
I think I'm not having ready number of console. I will ask my CFO to get back to you.
Okay. Okay. Got it. And second, sir, the 7,100 crore revenue that we are looking at, so I understood the whatever the balance, the projects where we have 70% plus kind of a completion is that is roughly 1,500 crore or 50 odd, so that we will be completing. We have already mentioned, and 4 HAM projects, 1,000 odd crore, 1,700 crore we have done. So close to, if I sum it up, around 4,300 odd crore is there. So just trying to understand the remaining projects where, obviously, Maharashtra one, we are saying, we are not factoring any revenue. So then the main revenue likely to be come would be Chennai, Tirupati, which is, and Kosi Parikrama, maybe, and maybe Bilaspur and Janakipur Railway. So if you can help us, not Bilaspur, so the remaining railway projects, except the Bilaspur and Janakipur, how much more revenue we can are likely to get in the balance?
So we are expecting the entire completion would be done in DMRC Metro, and the Bilaspur project would be 100% completed. Kanpur will pick up very fast now onwards because of the initial being a brownfield project. So in New Delhi railway station, we are expecting around 200 crores of execution within the year. So it's around 1,100 crores of railway execution which we are expecting in 9 months. And apart from this, there's a solar 500 crore which we already total will be done, and around 300 crores will be coming from West. So this is put together. If you consider the new HAM, four HAM, where the appointed date is being declared around 1,200 to 1,300 crores. So this is coming at about, say, even more than 5,400 crores, which is probably the number which is coming. Which is balance, which we done in 9 months.
Okay. Okay. And then next year, as previously we guided, we will be doing a 8,000 crore plus kind of revenue in FY27.
Yeah, that would be around 8,000 crores. Right.
Okay. 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 Got it, sir. Thank you. And then, sir, lastly, on the CapEx front, last time we said nothing much CapEx in this year. Okay. Okay. And even not in for next year also would be a very minimal.
So we are having almost very good gross block, and where the project which we are almost completing. So this entire fleet of our construction equipment is free to be deployed to sufficient to about 8,000, 1,000 crores of project.
Okay. 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 Got it, sir. Thank you. All the best.
Thank you. Ladies and gentlemen, we will take that as the last question. I now hand the conference over to the management for closing comments.
So thank you for joining us today. And we have a strong year marked by solid financial performance and a growing order book and a committed team. We remain confident of our continued success and here to exist. For any further queries, please feel free to reach out to our IR advisor, Go India Advisors. Thank you.
Thank you. Ladies and gentlemen, on behalf of Go India Advisors and HG Infra Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.